Hello everyone, welcome into our channel. Please, if you see our video to have value, please consider liking so that other beginners can be able to see the video, and also subscribe into our channel. Welcome into our first season, our first episode, where we'll be unpacking in detail the beginner stuff of forex trading. Currently know that in the situation, it forces everyone to have a side hustle, so it's wiser for you that a day you take one episode for the period of 30 days, and then you will then dive into the second season. So this season is good for the beginners who have not yet started trading, but they are still thinking how on beginning to trade. So we will first look on the introduction to forex trading in this episode. In this episode, we will be unpacking mainly the understanding basics of currency trading with our company Vutela Technologies. So stay tuned. Like I've just said, just grab your popcorns or your snacking biscuits and your drink. Just listen this brief video. It will be a 15 or 20 minutes video, getting the basics on what really is forex trading, because a lot of people, they have seen people on YouTube and on Instagram and all the social medias, they just telling them that forex trading, you will make millions in a day. What is it that is in forex trading? So stay tuned, listen attentively, and whenever you have some questions, make sure you comment in the comment section below, that we can attend to your questions, and other recommendations will be there waiting for you. So there is this disclaimer. Make sure that you pause the video, you read this disclaimer, so that you can proceed knowing all the information you need to know. The outline of the video is as follows. There is explanation of forex trading, the importance of forex trading, structure of the market, the key players, the currency pairs in forex, major currency pairs, the minor and exotic currency pairs, forex trading, how it works, the types of markets, the trading platforms, and the reliable brokers, leveraging forex trading, methods of analysis, technical analysis, fundamental analysis, benefits of forex trading, the risks of forex trading, managing risks in forex trading, common forex trading mistakes. So stay tuned as we beginning right now. So we said that we unpacking what is forex trading. See, forex trading, it is also known as foreign exchange trading, commonly known as forex or FX trading. This is the first global marketplace where individuals, institutions, and businesses, they buy and sell, they exchange and speculate on currencies. The trading, it happens digitally. So the forex market is the largest and most liquid financial market in the world. So, and it dwarfs other financial markets such as the stock market, with a daily trading volume exceeding $6 trillion. So the market operates on a global scale, facilitating the exchange of currencies for various purposes. So from international trade to speculative investment. Forex trading, it plays a crucial role in the global economy. So businesses engage in international trade, needed to exchange the currencies when paying for goods and services. Like I've mentioned earlier, that this trading, it happens digitally when the goods are exported and imported. There are people who are updating the system, and then the system will record all of that. For example, a company based in the US that imports products from Europe will need to convert the US dollars into the euros to pay for the imported goods. Similarly, these governments and financial institutions, they need to convert the currencies when investing them internationally. So unlike trading stock markets, the Forex market, it operates 24 hours a day. Come on, 24 hours a day from Monday to Friday, the Forex market. So this is because the global currency trading follows the sun starting in the Asia Pacific region, moving across the globe through the Europe and into the North America, so creating an uninterrupted trading cycle. So Forex trading, guys, it's something that happens globally. So let us explain further the Forex market. If I can explain further, I would say it is unique in its structure and operation. It's very unique, unlike the stock exchanges, which are centralized in the specific locations, like in the NY session. The Forex market is decentralized. It means that currency trading, they operate electronically over the counter. Like I've just said, someone is uploading the data for the imports and exports. So that's why it is sometimes called the OTC, meaning that transactions, they occur directly between parties without a centralized exchange. So the participants in the Forex market, they range from large financial institutions like banks, hedge funds, to small retailers, which are you in this case. The main players in the Forex market, they are many. So we have gone to let me unpack the structure of the market in terms of the financial hubs. We'll say it's the London session, the NY session, the Tokyo, and the Sydney. Here are the times, as you can see on my screen. It starts from 7 a.m. The Sydney starts from 7 a.m. and close at 4 p.m. Basically, the Tokyo, it starts from 9 a.m. and also close at 6 p.m. The London session starts from 8 a.m. and close on 5 p.m. So the NY session starts from 8 a.m. and also closes at 5 p.m. So these are the times, but here is the local times. On the UTC times, it's whereby the currency pairs related to that session, they are more active than ever. So at 9 a.m. At 6 to 9 a.m. they are very, very active. So it's the transition times, actually, in simpler words. So that's it. Sometimes you'll find them being displayed like this. It doesn't mean that it's still not the market. The Forex market sessions is still the same, but the fact that they are displaying it like this, they want to show you the transition times. For instance, like this one here, as you can see here, the timing, the transition times. See, the overlapping times, it's not basically the same, but it is what it is. So make sure you stay tuned by monitoring this on the charts as we proceed unpacking these things. So there are key players in the forex market, which are the central banks such as the US Federal Reserve Bank or the European Central Bank or the CBE, Central Bank of England. They play a significant role in the market as they influence the currency prices through monetary policies and decisions and currency interventions. So other than the central banks, there are what you call the commercial banks, which are large multinational banks executing the bulk of foreign exchange trading. They facilitate transactions for their clients and conduct speculative trading. So there are also corporations, which they are multinational corporations. They engage in forex trading to hedge against currency risk when conducting international transactions. And also they are the retailers, which are the individual traders who trade for personal profits, make up a smaller percentage of the forex market. So these traders, they often use the brokers to gain access to the market. Brokers like the broker below, where you should I'm recommending you to use it so that you can have your free demo account to practice what we are giving you here. So the currency pairs in forex market, so the currencies are traded in pairs. This means that when a trader buys one currency, they are simultaneously selling another. Excuse me. So each currency pair is quoted in two pair structure. The first currency referred to as the base on the left. The second currency refers to at the quote on the right. So for instance, like you can see here, the euro dollar, the euro is the base currency, the dollar is the quote currency. So the quoted price, it tells you how much the quote currency is needed to buy 1 unit of the base currency. For example, if the euro dollar exchange rate is 1.2208, it means that 1 euro is worth 1.2 US dollars. If the exchange rate increases to 1.250, then the euro has a strong trend relative to the US dollar. So we also have the types of currency pairs. There are major pairs, the minor pairs, and the exotic pairs. So the major pairs, they involve the most traded currencies globally. They include the pairs like euro dollar, GBP dollar, the dollar JPY, and USDGF. So they typically involve the US dollar and currencies from stable developed economies. Like when we talk of the major ones, they always include the dollar and also the currencies from the stable economies. So the minor pairs, they do not involve the dollar but involve the other major currencies like the euro, GBP, and the Aussie JPY. So they are also the last one, the exotic pairs, which they involve the major currency paired with a currency from an emerging or smaller economy like dollar Thai, the Turkish lira, and also the euro Thai baht. So these are the currencies you will also come about. So yeah, as I've just said, these are the major pairs, and also these are the minor pairs, the exotic pairs. So people will be asking themselves, so how does this forex trading So in forex trading, the basic principle is to buy a currency when you expect its value to rise relative to another currency, and sell it when you expect its value to fall. So profit in forex trading is made by predicting future movements in currency exchange, and we analyze the history and predicting the future movements in currency exchange rate. So there are various methods and strategies that traders use to analyze the market and make trading decisions. So there is what we call the spot market. The types of forex markets, there is what we call the spot market, and also the forward and future markets. So the spot market is when currencies they are showing certain patterns, it means their movement is being speculated either up or down or buying or selling. So there is also the fundamental analysis, where the economic reports, the interest rate, and geopolitical factors, they have a high impact on the market based on the data being released. So usually there is CPI, NFP, CPI, there is NFP, interest rates, and also, just to mention a few, they make the market to be so aggressive. So these are the two types of analysis. So as an aspiring trader, you must know that which one are you really interested to be. Either you want to be a fundamental analysis trader, or a fundamental analysis or technical analysis trader. So there is this thing which is very important, identifying the trends or the patterns in technical analysis, where the trend in patterns, there is an uptrend, there is a downtrend, there is a consolidating market. Uptrend is bullish, downtrend is bearish. Consolidating, it's when the market it's moving horizontally, it's in equilibrium state. So like I've just said, monitoring the economic and political data is crucial on the currency values, where it has an impact on Forex market. So there are some benefits of Forex trading. Forex trading is high liquidity. It means you make a lot of profit in a short space of time. It is accessible 24 hours, meaning during the day you can do your work privately, and then at night you can focus on trading. So there are low transaction costs. You don't have to rent a building, you don't have to hire people, you just do it on your own. You do it with your cell phone, not even a laptop. If you don't have a laptop, yes, so your smartphone, you can also do trading with smartphone. There are some risks of Forex trading. It's volatility, for the leverage risk, the market complexity. So you must take heed of these risks and be able to manage these risks in Forex trading, especially use of stop loss orders, avoiding emotional trading. You must have the risk management strategies. So these guys is very important. Some mistakes people that they keep repeating them is the overusing of the leverage, failing to plan or manage their risks, the trading without a strategy. So these are the things, guys, you should take them away. So I would like to take questions and give answers in the comment section below. So in our next episode, be ready for our next episode, because in our next episode we will be going deeper, because we will be teaching you how to choose a broker, the factors to consider, the comparison of popular brokers. We will have at least 10 popular brokers, and also giving you the option on how to open a demo account, verify it. So we will then quickly release our episode 3 for setting up your trading account, the step-by-step guide, and the required verifying and documents, and also how to fund your account. So that's the 2 episode will be dropping very soon. So stay tuned, subscribe into our channel, and also click the notification bell, so that when we are releasing the 2 episodes, you will be first to be notified and shouldn't be left behind. Thank you so much for your time and watching. Bye bye.